Hey, it's Seth, your mortgage strategist, helping you get more transactions to the finish line. We all know that life happens. We've all walked with clients, friends, family members, sometimes going through tough seasons, especially the ones where relationships come to an end. Sometimes divorce is super messy, yet sometimes it's actually cordial and both parties are on the same page. Sometimes it requires every ounce of legal guidance that's available, yet sometimes both parties are generally trying to move forward with clarity and dignity together. But from a lending perspective, divorce can ice a transaction so quickly. The minute that paperwork is filed, there can be major implications for qualifying, including debts, assets, title, ownership, income, child support, maintenance. These all matter to the lending equation. In many cases, everything needs to be put on pause until that final court order, separation agreement, or divorce decree actually comes through the courts. This process can take 90 plus days, depending on the situation. So to be clear, sometimes that's exactly what needs to happen, especially if there are contested assets, disputed debts, custody issues, support obligations, ownership questions. The legal process is there to protect everyone involved, and it's important to do that. But not every situation is the same. Sometimes before the paperwork officially is filed, there may be opportunity for both parties to better understand that financial chessboard. Can one spouse qualify for the house themselves, or does the other need to buy another home? Some debts could be consolidated before those support obligations are finalized. Does somebody need to refinance or remove the other party? Is there enough equity to pull out and divide assets fairly? Will child support or maintenance help or hurt somebody from qualifying for their next property or their next living situation? These are not always easy conversations, but they're super important conversations to have. As agents, you might be the first one of their trusted voices to hear what a client's going through, to hear that they're headed into a major life transition. You're not their attorney, you're not their financial planner, you're not there to give legal advice, but you can be the person who, before they make any major decisions, say, it might be worth talking to a mortgage strategist to better understand some of the options ahead. And that one conversation can make a huge difference for the trajectory. Because once those documents are filed, those options narrow so quickly. Timelines can be altered, underwriting requirements can become significantly more complicated, and that transaction that might have had a path forward could now be forever delayed or frozen. Divorce is emotional. Real estate is emotional. Lending is super technical. That's why strategy matters. The earlier that we can understand those moving chess pieces, the better we can help clients make informed decisions to protect themselves, their kids, their family, and avoid unnecessary surprises. So if you have any clients that are going through divorce or thinking about separation, they might be needing to sell or refinance or buy their next place, let's have a conversation early. Sometimes the best lending strategy starts before that paperwork begins.